Hi everyone, welcome to my channel. In today's video, we'll be going through the members only weekly report. Before we get started, this video is only for educational purpose and it should not be considered as financial advice. First let's go through the market update. The S&P 500 index as well as the NASDAQ had a very strong rally for 7 straight continuous days. And on Friday it had a bit of lower closing, I think because of profit booking by some of the traders, and both the indices are well above the 21-day moving average, exponential moving average, which shows that the market is in a strong uptrend. And the primary reason was because of the optimism around the Trump inauguration, as well as the news about the Stargate AI infrastructure, about 500 billion investment in building AI infrastructure. And looking at next week, it's going to be a very big week for earnings, and it could be the deciding factor in terms of the direction that we take from to next week, because there are around $4 trillion companies that are going to be reporting next week, which are Apple, Microsoft, Meta, Facebook, and Tesla. So this could be like so let's go through the what do I think. Like, I strongly feel that momentum is back in the markets that we saw from 7 straight days of higher close. And like Stanley Druckenmiller said, like, the animal spirits are back. And we also need to learn, like, the thing that I've been mentioning several times in this channel, which is that markets are always forward looking. Markets just forgot what the bad news around the jobs data, and has strongly rallied based on the bank's strong earnings report, as well as the CPI news, as well as Trump inauguration. So markets are always forward looking. It doesn't care about what happened in the recent past, and then it is always trying to factor in the new information that is trying to come in. That markets are always forward looking and discounting mechanisms. And given that we are at all time, like, near the indices, both S&P 500 index is made a new all time high, but the NASDAQ is inching closer to its all time high. There will surely be some volatility because of the price discovery that happens between the buyers and sellers, and then the direction will become clearer. So now we can push higher if the market continues to push higher. If the index moves higher, then there will be more investors who will be piling in due to the FOMO. Also, those who had initiated a short position, they will be covering their short position, so which will further add fuel to the market rally. The one thing that I think that might drag the market down is the big tech's earnings. If one of them, there are four of the $1 trillion companies that are going to be reporting next week. So even if one of them disappoints in terms of earnings, it could drag the market slightly lower. This is what I feel could happen. If one of the big tech earnings disappoints, then it could be a good reason for the markets to pull back slightly. And there were some excellent callouts in the last week's watch list, which have made it free for everybody. So Triple M, it gave a strong breakout, as we can see from the chart here. You can see from here after a strong earnings, it has gapped up and it has been pushing higher. And looking at the follow-through days, it has also pushed higher, which shows that there is a strong bullish trend in this one. It was also one of the strongest momentum stocks from the S&P 100 index. Let's look at the other things that were mentioned. Like, if you look at next week's earnings, so there is Apple, Microsoft, Meta, and Tesla, which are going to be reporting next week. There are 2 other callouts where Twilio, which rallied. There was a huge gap up after the news of share buyback came into the market. Like, I think it's a second gap up. There was a gap up here back in October, and now again there is another gap up. And we can see the continuation pattern here. The price hasn't moved even closer to the 50-day exponential moving average. It has just bounced off of the 21-day moving average, which shows that the buyers are clearly in control, and the stock price wants to push higher. It's evident from the way it has moved closer along its 21-day moving average. Some of the other charts we will look at in today's video will also show this kind of a characteristic. So this is, whenever I look at this kind of patterns, I like these kind of stocks that kind of bounce off from the 21-day moving average, which shows that it is showing strength. It rallied a lot. The other ones that moved were GEV, the entire power sector, along with the AI semiconductor industries have been on a rip. You can see here as well, like it has not even moved close to 21-day average for a good period of 6 months, and then now it has bounced off. And even during the sell-off or the pullback times when the index was pulling back, it just moved closer to the 50-day exponential moving average, but it didn't even touch. And now it's moving higher. The other ones, the other one was Sophie. This one could be a little volatile, and for full disclosure, I have a position in Sophie. I've posted about this on Twitter. I mentioned this last year. This was the place I made the video last year. I mentioned this breakout. I've also posted about it on my Trading View ideas, I think. Like if you look at you can see from here I posted here, and since then the stock has moved quite significantly, like close to $15-16 from 10, which is a huge rally. Just sharing some of the winners. Reddit as well was shared last year on the channel. It has been on a rip. The gap was so huge and it has never closed the gap, and it formed a ascending triangle pattern breakout. I added to my position here again. Here I took the breakout here, which moving sideways, but it's one of the strongest stocks. As you can see, the price has always been above the 21-day moving average. Now I do not know if it will continue to rally. All I know is if it continues to rally, I'll continue to hold. If it falls back and if it hits my trailing stop loss, I will close it and I'll move on to the next trade. Keeping losses small and riding the winners is the only way to be profitable in this business, and that's what I try to do. These all were mentioned in last week's caller general watch list. So this week's watch list as well, some of these names are pretty regulars, like Palantir, AVGO, Broadcom. That is, like if you look at the charts, you can go through some. These are some of the good names that I have filtered from the momentum stocks. How do I select these watch list? Is I scan for momentum based on 3 months and 6 months, and then I try to look for patterns and continuation patterns, and that's how I collected this list. Why do I select momentum? Is because momentum is one of the strongest predictor of future stock returns, is one of the best among all the factors like value, growth, or anything. I've said this multiple times on this channel. Momentum is a premium anomaly and is a very good predictor of future stock returns. Some great names here. Let's look at some of the for the focus list. I'm fully invested in my current positions. For this year, I do not want to take a lot of positions. I want to concentrate on a few positions and manage them properly. That will be my focus for this year. I'll try to restrict anywhere between 5 to 10 discretionary trades, while I have the systematic portfolio which always has 10 positions. So my overall positions I try to limit to 20 or less than 20. Now CRM, Salesforce, there has been a lot of talk about AI agents, and this is one of the leaders in terms of enterprise software for customer relationship management software, and it did give a breakout at this level. I did take a trade, but I closed out as it hit my trailing stop loss. But right now it is retesting the same breakout level and is pushing higher. So it is a good candidate for those who like retest of breakout levels. So this is usually preferred by traders who are very conservative and want to minimize the risk. So it is now retesting and it's bouncing off, which is a very good sign. So why do I say that retest of breakout levels is preferred by conservative is that you can have a very tight stop loss around like 319 means like you can have the previous low as your stop loss, and what you risk in this is pretty small. There is a very likely, like there are, like I always say, there are three directions in which the stock could move. If it goes higher, we will be profitable. If it goes sideways, then we can exit because there will no longer be momentum, or if it's your stop loss, we can exit and move on to the next trade. But because it's being retest and it's showing rebounding from the breakout retest of the previous breakout levels, it is there is a very small amount that we can risk and take a trade here. But I won't be taking this. It's just for how usually people who trade the retest or breakouts trade, because the risk is minimum in this kind of trades. So that's a point I want to get across. The other one on the list is Walmart. It has been consolidating very solidly, like you can see from here. The stock price hasn't touched even the 50-day moving average. It has always bounced off, and right now it is trying to regain its previous high that it made. Like some types of traders, they try to preemptively enter, thinking, okay, this might enter. That is one style. I sometimes, when I know the company or when I know I try to enter in these levels itself before the pattern breaks out. Whereas some traders usually want some confirmation that they want to see the price push above this higher level, and only then they will be entering. There are different styles of entering. Pick and choose one that fits your personality. That should be the case for any type of setups that you trade. The other one is MRVL, another one that is strongly bouncing off from, like you can see from the 21-day moving average. It has not moved close to the 50-day moving average at all. Every time it touches the 21-day moving average, it is finding a lot of buying interest from buyers, and that's the reason why the price is pushing higher. That's MRVL. And it's near its breakout level as well, and that's the reason why it's on this focus list. Amazon, there are plenty of flag breakouts. Amazon is also one of them. As you can see from here, the flag was pushed and then the price rallied after the flag pattern was broken. There will be many flag patterns which will not work out. In those cases, we will keep our loss to small amount, and we'll ride on the winners that continue to push higher. That is the way of being profitable in this particular business. So Amazon, flag pattern breakout. CrowdStrike, it has recovered very well after the huge drama around that security incident. Like it even pushed below its 200-day moving average, and right now it is bouncing off the 21-day as well as the 50-day moving average, and it's near its all-time high. So if these 398 level gets taken out, then it will attract a lot of momentum traders as well as trend traders who will try to capture on they think that this is the beginning of another wave or another trend, or because there is only blue sky above, so which means that there is no selling pressure, or at least then that's the reason why price is inching higher and higher. So once this all-time high gets taken out, there is only blue sky above. FTNT is another cybersecurity, just like CrowdStrike, also trying to break out to the new higher levels. Like it has already made a couple of attempts to take out the 100 level mark. As you can see from here, I'll make the chart bigger. It has tried to take out once, twice, and it's trying again, and it's it did give only one day it closed below its 50-day moving average, but it has strongly recovered from there, which shows that buyers are still interested in this particular stock. That is FTNT, cybersecurity. Dash has been one of the strongest momentum stocks in the NASDAQ 100 index. It was only pushed out because of the index rebalance, because there were some great names added to the NASDAQ 100 index towards the end of last year, like Palantir, AAPL and MSTR. You will find MSTR as well as we saw this in the above list, and these are the things that pushed Dash from the top 10 ranks. But as you can see, I have also made videos on this channel, I think, or on my newsletter. Right now we can see here as well, it is trying to break out of its all-time high. And the price, the way it has been moving, it has been bouncing off from the 50-day moving average, which shows that I don't want to be sound like a tape recorder. Like, yeah, it is showing strength, and this is what I want to look for in a stock as well. The other one, we already covered this because it was in the general list last week. Twilio, a huge gap up based on after the news about the share buyback plan. And this is a second gap up. The first gap up was back in October. Yeah, then the other one is Pure Storage, and because of the news around the AI infrastructure investment, all the AI related stocks have been pushing higher, and this is another one which is near its all-time high. Similar to CrowdStrike, if we take out this, it's already at all-time high level prices. Now there's only blue sky above, like I mentioned here, which means that there's no selling pressure coming in. Yeah, that's Pure Storage. Dropbox is another one that has been showing significant momentum. It has been bouncing off from the 21-day moving average, and it has just now given a breakout signal. Yeah, this is also one to watch and one to keep in your watch list. And just to reiterate, the price levels and all these things that I mentioned are my price levels. You need to decide your own price levels for entry and exit depending upon your own personality, trading style, and what time frame do you do, and what is your risk tolerance. And yeah, like I did publish an article about my trading style or my trading and system, how I construct my portfolio. There are two components to it. I'll make a video on it, like a separate video on it, about how I go about constructing this. And behind both the styles, momentum is the core factor based on which I trade and invest as well. And all the stocks mentioned here are for educational purpose only. You need to consult with your own financial advisor before you take any financial decision. And do join my Patreon community. This is the link for it. I'll be posting some more courses and some more educational content here. Do follow and subscribe if you haven't done already. Yeah, and yeah, that's all for today's video. Thank you for watching, and do subscribe to the channel. Thank you.